I'm David Talbot, Managing Director and Head of Research here at Red Cloud Securities. During the next session, we'll be hearing from several companies that have international assets, notably from either current or past producing countries. Plus, we have another physical uranium company to speak to us today. Now, during this session, we have Lotus Resources, Forces Metals, Laramide Resources, and Yellowcake PLC. Unfortunately, Daniel Major from GoviX Uranium had to pull out due to a family emergency, so we pray for his family there. Each company will have 10 minutes to present, and all speakers have taken, when all speakers have taken their turn, we'll then have a 20-minute round table panel session. Viewers, please feel free to ask any questions, either to a specific company or a broader question that we could pose to the group and get a myriad of answers. Please use that Q&A button on your screen and we'll get to as many questions as we can. So let's get to it. Up first, we welcome Keith Bowes. He's Managing Director of Lotus Resources. So Keith, why don't you take it away?
Thanks very much, David, and hi to everyone who's joined us today. As David has mentioned, my name's Keith Bowes and I'm the Managing Director for Lotus Resources. Lotus Resources is a relatively new player in the uranium space. Lotus Resources has acquired the Kayelekera Uranium Project, which is located in Malawi, from Paladin Energy back in early 2020. I'd just like to start the presentation off there. If you can just see my first slide over there, just really showing a picture of the asset that we have acquired. So as you can see, they're a past producer with a significant amount of infrastructure already in place. Paladin must have spent somewhere between about $200 to $300 million when they started this asset up. That money was spent on the processing plant, on accommodation, on access roads and various infrastructures. So I suppose the question I always get asked is, what was it about the Kayelekera asset that attracted Lotus to it? And I suppose there's a couple of points there that I'd like to talk about. First of all, is we recognize that it is a proven past producer. So it operated between 2009 and 2014. And in that period, it produced about 11 million pounds of uranium. And all of that material was accepted by the Western conversion facilities. So that's Cameco, Orano, and also Converdyne as well. So when we look at the product, it's a high quality product that has previously been treated by these conversion facilities and has been sold into both the North American, the European, and the Asian markets as well. As I mentioned, Paladin spent a significant amount of money in terms of constructing the asset. When we did the review, our initial review of the asset, we consider that the amounts of money we need to spend on restarting the asset is relatively low. Probably around $50 million is required to refurbish the plant and be able to then operate at around £3 million per annum capacity. We're busy at the moment in completing a feasibility study, which we'll be able to announce to the market very, very shortly. So we've had some good work done around there in terms of demonstrating those capital costs, but also identifying opportunities for improvements as well. So I think there is some stuff that we can do within the existing plant and the existing process to improve on the results we previously achieved on the asset. Then maybe just a last little item that also attracted us to the asset. When we initially acquired the project, the resource stood at around 27.5 million pounds. We have done some exploration work around the existing resource, that's the Kayelekera resource itself, and we've been able to grow that resource up to just over 46 million pounds at the moment, where we've also been very, very excited with some of the exploration results that we've had, specifically on our tenement known as Livingstonia, which is about 90 kilometers to the south of the existing Kayelekera asset. The drilling has been completed there, and we have done an updated resource there, which has added almost 5 million pounds to our global resource as well. Now that obviously cannot be treated directly as it is. It's a satellite deposit, and we would look at then treating that towards the end of the life of mine. So really, where is Kayelekera at the moment? Well, as I mentioned, it's a low capital project. It has all the existing infrastructure in place at the moment to be able to treat 1.4 million tons per annum, which at a grade of around 1200 ppm uranium relates to or converts into around a 3 million pound per annum production rate. One of the things that we did like about the asset is we did recognize there are some new technologies out there that were not available when the asset shut down in 2014 that we think can be implemented now and would allow us to effectively reduce the operating cost of the asset and be able to improve the project economics. I think it's also important to note that we have all of our licenses in place. So we had our mining license was extended for another 15 years at the beginning of September last year. So we have 15 years of mining license valid at the moment. We also have all of our environmental licenses in place. And we also have the majority of our permits that are required for a restart already in place. And then, as I mentioned, we've had some really good success on our exploration side. However, there still are multiple other targets that we can still follow up in terms of growing our resource and adding to our life of mine as we move forward. I'll just talk a little bit about the technical work that we've been doing. So after we acquired the asset in March of 2020, we undertook a preliminary scoping study in terms of understanding exactly what we had. And in that scoping study, we made the decision that we would develop the scoping study, assuming that we would operate the plant in exactly the same way that Paladin did. And on the back of that work, that's where we identified the $50 million of refurbishment. But I think probably what was more important that we got out of the scoping study was we were able to use the scoping study as a mechanism to try and understand what the major value drivers and cost drivers were for the project. By flexing various things, we could see what was adding the most value to the project. And on the back of that work, we identified 4 different areas that we think can add significant value to the project. And we've been working on those since mid-2020. And the results of all of the work we're doing in these different areas will be put into the feasibility study that will be announced to the market next month. So the areas that we identified that we think can add value to the project include things such as ore sorting. Now, ore sorting is a technology that allows us to manage our grade that gets fed into the plant, into the main part of the plant, and really does simplify our mining system as well in terms of going from what we might consider to be a selective mining process into more of a bulk mining process, and then using the ore sorting to manage our grade going forward. Ore sorting itself is a relatively simple technology. It requires us to crush the material and then put it underneath a number of sensors. The sensors then characterize the various rocks and make a decision whether to accept or reject the individual rock. One of the things that's really good about Kayelekera and its ore is ore sorting is particularly good for it because we've recognized that most of the high-grade material is associated with darker rocks. Most of the lower grade material or the waste material is actually associated with lighter colored rocks. And we can use really simple technology in the ore sorter, such as a color sensor, to be able to separate this material out. And our test work to date has shown we've been able to double the grade of the material we feed into an ore sorter. So we can take a 1000 ppm run of mine material, put it into the ore sorter, and produce a concentrate that grades around 2000 ppm with recoveries in excess of 85 to 90% recovery as well. So really great stuff for us moving forward. It will allow us to not only maximize our throughput at any point in time, but also allows us to use some of our lower grade stockpiles as future feed materials for the plant. So that's one area we've been looking at. The other one we've been having a look at is associated with power. So when the mine operated previously, it operated off diesel gensets, which is a relatively expensive power source. We're looking at connecting to the national grid. We're looking at solar options, and we're also looking at taking power off our acid plant as well. And we believe we can halve our power costs. And when you consider that power makes up about 20% of our cash costs, halving our power costs has a significant impact in terms of reducing our overall operating costs. We've also recognized acid as an important thing, and we're having a look at technologies like nanofiltration to recover our acid and better utilize our acid in the leaching circuit. Again, acid accounts for about 15% of our cash costs. By using nanofiltration and better utilization of our acids, we can actually reduce our overall consumption by almost 25%. So our scoping study showed that we had an operating cost of around $35 per pound. We think with the implementation of these various technologies, we should be able to get our operating cost to less than $30 per pound. And when you combine that with the low capital, as I mentioned, $50 million for the refurbishment, there will be some additional costs required for the ore sorting and the power, but we're probably talking an order of magnitude of maybe another $30 to $40 million on that. So for circa $100 million, we'll be able to get a plant up and running that is capable of producing around 3 million pounds of uranium per annum, with a life of mine in the order of about 10 years. So just in terms of our pathways forward with regard to restarting the asset back up again. So as I mentioned, we've done a lot of exploration work over the last 2 years. We have the 46 million pounds of uranium in our current Kayelekera resource, which has been used for our feasibility study. Our feasibility study is nearing completion and has taken into account all the new technology work I've been talking about. We will be announcing that feasibility study to the market in middle to late July. And on the back of that feasibility study, we expect to be able to ramp up our negotiations with the various utilities regarding offtake. And at the same time, we'll also be looking at some financing options in terms of looking at some debt or maybe looking at some equity options moving forward. Now, assuming we get the financing in place and the uranium price is at a suitable level, we would be in a position to make a final investment decision by the end of this year. And if we did make that decision at that point in time, it's approximately 12 to 15 months for us to refurbish the plant and bring it back online again. So we could be up and running and producing uranium, producing yellowcake by early 2024 and delivering to our customers in the middle of 2024. Just want to talk very, very quickly about some ESG activities as well. So obviously, being a company that is working in Africa, the work with our communities is very, very important. We're looking for social license to operate. We're looking for opportunities to uplift the local community. If people are maybe not aware, Malawi is one of the poorest countries in the world at the moment. They are very, very keen on supporting the restart of Kayelekera because they recognize the benefits that Kayelekera can bring to the country through not only jobs and training, but also through the taxes that we pay and also foreign currency inflow as well. So we've been having a look at our ESG, and we do know when we're talking to the debt providers, when we're talking to some of the funds, ESG and the work we're doing around there is very, very important. And we've also seen that in some of the negotiations we've been having with the off-takers as well. So really important for us from an operating perspective, but we think it also gives us financial benefits moving forward as well. So really just to wrap up then in terms of where we are. So we believe Lotus is well positioned for the next uranium cycle. We have a DFS that is imminent, that is going to show some major improvements over the way the plant was previously operated. We have a board with significant African and uranium experience. We have an asset that is a proven producer, produced over 11 million pounds when it last operated. And we believe there's still some significant value upside for the company as well. And that value upside comes through not only the technology work that we've been doing that's going to be presented in our feasibility study, but also the exploration upside as well. And also I think when you do a comparison to some of our peers out there, some of our brownfield peers that have assets on care and maintenance, I think we're still undervalued compared to those as well. And lots of opportunity for share price growth in the future. Just talking about what we can expect over the next 6 months or so. So we have some more exploration results coming out from our Chilumba area. We've done our resource upgrade. The feasibility study I've spoken about as well is coming out next month. And post that, there should be some information regarding offtake, regarding financing options as well, all leading into what I hope will be a final investment decision by the end of this year. Thanks very much, David.
Okay, thank you very much, Keith.